Welcome today to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 1st of October. The broad dollar strengthening that we've seen in the last few days has really started to take hold, and that is coming through. You can see dollar index breaking out to multi-year highs. That is highest since May 2017. Now anyone who looks at euro dollar will know that euro dollar has broken down to levels not seen since May 2017 as well. So it's around about 57% of the index on euro dollar. So the two are fairly well negatively correlated. But you can still see that we've got a downside break on gold. I'll talk about the technical implications of that as well. And we're seeing the continued just drift higher of dollar yen. Now, the big move overnight and into today's session has been the Aussie dollar, the weakness of the Aussie dollar coming on as the Reserve Bank of Australia has cut rates again. Third time in 5 months, that is, the RBA cutting rates. Fully expected by the market, but still falling away on the Aussie dollar. The Kiwi dollar also down as well, in a fair amount of sympathy, I might add. Now, in terms of equity markets, we've let's just talk about Treasury yields first of all, because this dollar strength is coming as Treasury yields have really gone nowhere, I suppose, in the last week or so. Little real direction coming through, and certainly it looks as though that that yield differentials are not really the driving factor at the moment. I think the markets are taking the relative strength of the US economy as being a key factor. There's going to be a focus on the Fed speakers today. There's a whole raft of Fed speakers. We've got Charles Evans, we've got Richard Clarida, we've got James Bullard, and we've got Michelle Bowman all speaking today from the FOMC. They're all voters as well, so it's going to be a really interesting day potentially there. But certainly the focus is on this dollar strength that we've got running through markets at the moment. Now, first day of the month is PMIs, the manufacturing PMI data. Final readings for the September data from the Eurozone, a shade higher on the reading there. And if you scroll up, you can see the fact that Germany was a touch higher, France a touch lower, as was Italy. So it all sort of adds up to a shade higher on the Eurozone reading. We've also had the UK numbers, UK flash PMI, UK manufacturing PMI, better than expected, 48.3. significantly up from expectations, but it remains in contraction mode, and it's allowed sterling to be supported a little bit today, handful of ticks, maybe 10 pips higher on sterling dollar, but nothing really doing yet in terms of direction. I think the US data and the US speakers this afternoon, Fed speakers, are going to be key. We've got at 10 o'clock Eurozone inflation data expected to be a mild upward revision of from the flash on the core data to 1%, but still well underneath the 2% or close to the 2% target where the ECB is sitting. So it's not going to do a great deal to change the narrative there. Into the afternoon, we've got the ISM data. ISM manufacturing expected to be 50.1, and as you can see here on the chart, that would be an improvement, certainly a turnaround of the trend, and back above 50, which is very, very sort of marginal, very tepid expansion for the manufacturing sector in the States. Okay, so it takes me to my chart of the day, which is Euro Yen. Now, Euro Yen, interesting chart, because what we've seen is this continued falling away, this downtrend, lower highs, lower lows. Rallies are being seen as a chance to sell. We saw that September rally as risk appetite improved. That hit the yen. That risk appetite improvement is just dissipated now. It's testing this old support at 117.50. That is a key line in the sand. I would be taking that as, because I think if you start to see the Euro Yen closing below that, again, that would reopen the lows. You'd be really starting to see the momentum building again to the downside. You're already trading underneath all the moving averages. So Friday's rally got sold into, and yesterday we tested that 1750 level, which held on the initial test, but again, I think it suggests that the market is under pressure now. 118.50 is a bit of a basis of resistance here. You can see that 118.50 on the hourly chart comes in, bit of a pivot line, and rallies towards that. I think are seen as a bit of a selling opportunity. I think on the daily chart. The near-term chart is a little bit more rangy than the daily chart would suggest, but certainly I think rallies are still going to be seen as a chance to sell. You've still got these corrective outlooks on MACD, stochastics. RSI picked up around 40, but I think, to be honest, the selling pressure is still in the market here for using rallies as a chance to sell, and likely to see pressure on 117.50 again, and a closing breach would open 115.85, which is the next real basis of support underneath 117.50. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars. Thank you.